Hello, I'm Lisa and I volunteer with CPA Canada Financial Literacy. I'm here today to talk to you about money. Money is an important part of our day-to-day lives. We spend a lot of our time focused on our personal finances, how we earn money, how we save it, and how to make it work hard for us so we can do the things that we want to do. To be clear, we're not selling any product or services today. This presentation is provided free of charge as part of our professional mission to provide information to enhance financial literacy in Canada. When you first moved to Canada, you likely started noticing differences right away in how money is handled here compared to what you might be used to. An important part of settling into your new life in Canada is getting control of your finances and knowing where to find good resources and services to help you make informed decisions. This is where we hope to help you with during this presentation. We will look at some basic areas of personal finance, and I will try to give you a head start at gaining the knowledge, the skills, and the confidence to make responsible financial decisions in your newly adopted country. At this point, you would go over logistics such as where the washrooms are located, breaks, where you would entertain questions, any kind of emergency evacuation procedure information as well. I've provided each of you with several handouts as well as a copy of my presentation so that you don't have to take many notes. If you have any questions as we move through this, please let me know and I will try to answer them. I'll also save some time at the end to answer any questions you may have. Here's our agenda. As you can see, we have lots to talk about. I will start by explaining why CPA Canada has become involved in helping to improve the financial literacy of Canadians. Then we'll look at bank accounts and banking services, why you need to open a bank account, choosing a bank that's right for you. Next, we'll talk a little bit about debit cards and credit cards, as well as automated teller machines, ATMs. We'll show you how to start building a good credit history to help you achieve some of your future financial goals, such as buying a house, a car, or paying for your children's education in the future. Then it is on to paycheck. I'm going to try to explain all the payroll deductions that are taken off the top before you receive your take-home pay. Finally, we'll focus on filing your income tax return and provide you with some resources to help you guide through that process. I want to get started by defining financial literacy in Canada and why the Chartered Professional Accountants of Canada are interested in helping Canadians improve their understanding of financial matters. Financial literacy is defined by the Financial Consumer Agency of Canada as the knowledge, skills, and confidence to make responsible financial decisions. Knowledge refers to an understanding of personal and broader financial matters. Skills refers to the ability to apply that financial knowledge in everyday life. Confidence means having the self-assurance to make important financial decisions. Responsible financial decisions refers to the ability of individuals to use that knowledge, skills, and confidence they have gained to make choices appropriate to their own circumstances. As chartered professional accountants, we know about money. Advising individuals and businesses about their money is what we do. CPA Canada and our members across the country are uniquely positioned to help with financial literacy. That's why we're taking this proactive role in delivering this program. One of the first things you'll want to do as you settle in your life in Canada is to build a relationship with a Canadian banking institution. If you're new to banking or if you lived in other countries where the banking system can't be trusted, you might be wondering why you would want to bank at all. Well, here are some things you might want to consider. Security. Keeping all your money in cash at home is not a very secure thing to do. It can be stolen or lost in the event of a flood or fire. Banks protect your money, but make it easily available whenever you need it. Once you have more than a few $100s, it's a good idea to have a secure place to put it. There's convenience. When your money is in a bank, you can access it from anywhere. If you have a checking account, it's much easier to pay bills. You can write a check from your checking account and send it through the mail instead of paying the bill in person. You can even pay bills online or transfer money online. Savings and investing. Banks can provide you with other products and services that can help you start saving and investing your money to optimize your future financial situation. They also offer a variety of other services to their customers, including currency exchange, safety deposit boxes for storage of passports and valuables, and savings accounts. We have some handouts today, which includes an outline of Canadian currency and how to write a check as reference materials for you to review. At this point in time, I want to pause your presentation and go over the handouts, especially how to write a check. maybe go over some of the steps and ask if there's any questions. It's pretty straightforward, but it gives an opportunity to take a break and review some of the information you've provided them. If you're trying to decide where to do your banking, there are a number of things to consider. Legitimacy. First and foremost, you want to use a legitimate bank. There are a large number of widely known banks, credit unions, Caisse Populaire, and trust companies where your deposits and savings are insured by the Canadian Deposit Insurance Corporation, so you can be confident that your money is secure. Location. Most people prefer a bank that has a branch close to where they live or work, so that it's convenient to go to the branch or the ATM to make deposits and withdrawals. Services. Banks have their own unique features and most offer a wide variety of types of accounts and services designed to appeal to different sets of needs. You'll want to choose a bank that is comfortable and convenient for you. For example, are you someone who prefers banking in person, or would you rather use a check or a bank machine or the internet? Are you planning to write a lot of checks or will be paying most of your bills online? Is round-the-clock banking important to you? Those are things to consider. Fees. Some banks don't charge you for using your bank account as long as you keep some money in it. Others charge various transaction fees that can add up over time and decrease your account balance. You should shop around and look at each bank's fee schedule carefully before you sign up and make sure you understand what you need to do to avoid fees. And finally, size. If you plan to travel within Canada, you should choose a bank that will provide you with easy access to your money when you're out of town. Try to choose one that has ATMs in most major centers so that you won't have to pay service charges to use another bank's ATM to access your cash. So one thing to consider when you're opening a bank account is to ask the questions. Are there different service packages that are offered, sometimes at a discount for seniors or students, that are a little bit less expensive than the general public? Also make sure to read the fine print, understand what's included, what's not included, and make sure you have all these answers before your next billing cycle. On the topic of fees, we have Marjorie's story. Here is an example of Marjorie, who was from Western Europe. Her bank didn't charge her fees for everyday use, but after her first month, she realized that close to $10 had been removed from her account. She called customer service to ask what the charge was from. She was told that she had opened an everyday checking account, and if she kept $1,000 minimum in the account, she was allowed 10 transactions, not including deposits, that were free. If her balance was less than $1,000, she would be charged $4, but if she exceeded 10 transactions for the period, she would be charged 50 cents per transaction. Now, Marjorie knew not to use her debit card for everything. Since Marjorie hadn't known about these rules, the customer service agent credited the $10 back to Marjorie's account. Let's take a closer look at some of the most popular banking products and services. ATMs, or automated teller machines, are one of the greatest conveniences that banks have to offer. ATMs can be found at bank branches, grocery stores, airports, hotels, restaurants, gas stations, and many other places. Thanks to technology, ATMs can provide most of the same services you obtain through a bank teller or cashier, except these machines are available 24 hours a day, 7 days a week. Using an ATM, you can check your account balances, make cash withdrawals, pay your utility bills, deposit cash and checks to your account, get cash advances. You will need to use a debit card with a personal identification number to access your checking account through the ATM. You can obtain a debit card and establish your PIN when you open up your bank account. Here's a tip. Before you use a machine, see if it is owned by a reputable financial institution. Avoid unmarked machines in order to protect your personal information. While you can always use cash to pay for purchases in store, most Canadians use credit cards or debit cards instead. Both types of cards are available through your bank. In fact, debit cards and credit cards are so popular, many Canadians carry only very small amounts of cash. Debit cards. A debit card is similar to a check in that it allows you to access your money in your checking account. With a debit card, the money comes out of your account as soon as you make a purchase. A debit card gives you the convenience of plastic as opposed to carrying cash or checks, but allows you to pay for your purchases immediately instead of accruing a balance on a credit card. It also gives you access to ATMs so you can do your own banking. Credit cards. Credit cards are another useful way to pay for purchases. Most retailers in Canada will accept them. There are also situations when a credit card may be the only way to pay. For example, when buying items online. Some services such as rentals and flights require payment by credit card. Here's another tip. Some debit card with Interact can also be used similarly to a credit card. You can use a credit card to pay for purchases as an alternate to paying cash. And unlike payments by debit card, the money is not deducted from your bank account balance right away. That means that you have to be careful not to charge up more than you can afford. Each month, the credit card institution sends you a statement telling you how much you spent on your credit card and the minimum amount you need to pay back in order to keep the account in good standing. If you do not pay the full amount on your statement, you are charged interest. Interest rates on credit cards are generally higher than interest rates for lines of credit, loans, and other forms of credit. It's important to manage the use of credit cards carefully and try to pay off balances full in each month. There are handouts today that includes one for debit cards and credit cards, and it shows you examples of what they look like. Tip: shop around for a credit card that suits your needs. Is there a yearly fee? Does it give you additional protection, like car insurance? Does it give you cash back? You can also apply for credit card at another bank, not necessarily the bank that you work with. Interest also varies from card to card. While there's no charge for using an ATM at any of your branch, it can be costly to use an ATM at another bank or in a store. Generally, the company that owns the ATM will charge you a fee, and your own bank will also charge you a fee for processing. These fees will usually only be a couple of dollars each, but they can add up over the course of a month or a year and are unnecessary. If you plan to use an ATM frequently, it will definitely save you money to open your account with a major bank that has a lot of branches near you. Your personal identification number, or PIN, provides you with protection if your card is lost or stolen. You should choose a PIN that will be difficult for someone else to guess, and it's very important that you never share your PIN with anyone. The best idea is to memorize this number, but if you have to write it down somewhere, keep this information at home, not in your wallet, purse, or anywhere that is easily accessible, especially not on your card. Tip: when entering your PIN number at an ATM or store, use your wallet or hand to block the number on the pad. Unlike credit cards, debit cards limit your spending to the amount of money that's actually in your account, so they help you keep out of financial trouble. Credit cards, on the other hand, usually offer incentives or rewards such as free car rental insurance or product satisfaction guarantees. It is important to recognize that regular use of a debit card does not help you establish a credit history or improve your credit score. However, using a credit card wisely can be an effective way to start building your credit history. This last point is an important one. As a newcomer to Canada, it is important for you to understand how credit works and how to build a good credit rating. The first step is to start building your credit history as soon as possible. Credit history. Financial institutions will want to review your credit history if you're applying for a credit card, line of credit, or mortgage. Your credit history is information about your ability to pay back money you have borrowed. A good credit history will show that you are able to repay borrowed money on time. Missed or late payments will result in a bad credit history, making it difficult for you to borrow money in the future. In order to help you build a credit history in Canada, you will need to apply for credit. This can be challenging when you're new to the country, but one of the best ways to do this is to apply for a credit card. Canadian banks help newcomers build a credit history by offering a secured credit card. It provides all the advantages of a regular credit card, but requires that you set aside a certain amount of money or other cash-like asset to provide the bank with a security that you will pay the money back. For example, the bank may provide you with a secured credit card with a spending limit of $1,000 if you set $1,000 in a short-term investment, which the bank will hold as security. The amount will be returned with modest interest, usually at the end of the year. As you build your credit history by paying your credit card bills on time, your credit rating should eventually become high enough that you can confidently apply for and be approved for an unsecured credit card. Managing personal credit wisely is the first step to building a good credit history, something that can help you to achieve your financial goals in the future. Goals such as buying a house, a car, or paying for education for your children. Here's a story. Pietro was from South America. He had been here for 2 years and had been really good with his money. He avoided credit cards and loans because he was afraid he might overspend. He had no debts and had been saving since he started working. The rest of his family would be joining him later that year. He was working at buying his first house. He had enough money to put down a down payment, but needed a loan from the bank to cover the rest of the cost. The bank denied his loan application because even though Pietro had no debts, he had no history with credit. The bank could not see how he would handle paying back the money he had borrowed. Although in this situation, Pietro was being very prudent, avoiding all sorts of debt, it didn't help him when he was ready to take on a larger debt that he would need to borrow from the bank. So it's important to establish credit history when you don't really need it, so that when you are ready for it, that things will just fall into place. Building your credit history. Points to remember about credit. Avoid businesses that offer payday loans in exchange for your paycheck. They charge outrageously high interest rates. If you absolutely need a small short-term loan, consider other options such as borrowing from a friend or a family member. Use your card responsibly. Do not buy more than you can afford. While it may be tempting to purchase something right away, it is a lot smarter to wait until you have the money. Avoid interest charges by paying off your credit card in full every month if you can. Credit card companies charge interest every day, not just once a month when it shows up on your bill. A tip would be, do not pay the minimum on your credit card statement. If you look closely, your statement tells you how long it would take to pay off that entire bill if you only paid the minimum and you didn't add anything new on the card. Information such as your date of birth, your social insurance number, passport number, credit card information, and bank account numbers can be used by criminals to gain access to your accounts and steal your identity. Avoid the risk of credit card fraud and identity theft by keeping your personal information confidential. Check your statements regularly and report any unusual activity right away. Now I'd like to move on to taking a look at your paycheck and explaining some of the payroll deductions that are taken away before you receive your take-home pay. At this point in time, you might want to take an opportunity to ask if there's any questions on banking and credit before we move on to payroll. Understanding your paycheck. Your pay statement is a record of the money you've earned and the deductions you paid during a specific period. Paychecks are generally paid twice a month, but some organizations pay employees weekly or monthly. Your statement will show your hourly rate and the number of hours that you worked during that pay period. Total earnings is the largest number on your pay statement. This is the combination of your gross income and your taxable benefits, which could include RRSP top-up payments made by your employer. It could also include taxable allowances like travel per diems, car and cell phone payments that are paid to you by the company as well. The amount under gross income is the amount you make every week, every month, or every hour before your employer deducts any income taxes, payroll taxes such as employment insurance, and Canada Pension Plan or other items. Your total insurable earnings is the amount used by the Canada Revenue Agency to calculate your premiums and tax rate. This is usually equivalent to what you would earn working normal hours during the pay period. For example, a 40-hour work week. If we take a look at the sample pay stub, you will see all the items that were mentioned. For example, gross pay, the taxes and other deductions, and your net pay. Net pay is your gross income less all amounts deducted and remitted to the Canada Revenue Agency on your behalf by your employer. This is what you get to take home. Let's refer to the handout Sample T4 Slip. Let's take a look at some of the deductions. By law, your employer must deduct income tax, employee contributions to employment insurance, and to the Canada Pension Plan or Quebec Pension Plan from your employment earnings. They then remit these amounts directly to the Canada Revenue Agency. Your employer may also deduct additional amounts from your pay if you have opted to participate in a pension plan, a group insurance plan, or an RRSP savings plan, or pay child support directly out of your paycheck. While these deductions reduce the amount of your take-home pay, you will get credit for having paid these amounts when you file your income tax return. Canada Pension Plan, or the Quebec Pension Plan, and employment insurance or programs run by the federal government and participation is mandatory. You may benefit in the future by receiving payments from these programs. For example, if you qualify and retire after the age of 60, Canada Pension Plan or Quebec Pension Plan pays benefits to help support your retirement. Employment insurance protects you by paying out benefits should you become temporarily unemployed. The next category of deductions is federal and provincial income tax. Many of us do not like to pay taxes. However, they're important because they allow Canadians to do things that we could never do on our own. Things like providing education, healthcare, and building transportation systems. Every January or February, your employer will issue you with a T4 slip. This is an information slip that informs you and the Canada Revenue Agency of how much you were paid the previous year and the amount of income tax that was deducted. If you have more than one job or other sources of income, you may receive more than one T4 slip. The T4 is a key piece of information that you will need in order to file your income tax return. That's the next topic that we will touch upon. Before we continue on, if everybody would take a look at your sample T4 slip and see if you have any questions before we move on to the next section. Filing your income tax return. You have to file a tax return whether you're owed or you owe money. It's the law. You might receive certain tax credits or benefits such as the GST, HST credit, or the guaranteed income supplement under the Old Age Security Program or child benefit payments. If you had too much tax deducted from your paycheck and have not benefited from all the deductions and tax credits you're entitled to, you will need to file a tax return to claim an adjustment. There are a number of tax credits that you may be able to take advantage of, such as the child tax benefit, GST, HST credit, and the working income tax benefit. If you don't file a tax return, you won't receive these credits. If you have earned income, you can make RSP contributions to reduce your net income. If you don't make your full allowable contribution in any year, you can carry the unused amounts to future years. If you don't have enough income to take advantage of tuition, education, or textbook tax credits, you can carry them forward to future years, or you can transfer them to a family member. The deadline for filing Canadian income taxes is midnight, April 30th of the following year. If you owe income tax and you file your income tax return after the deadline, the Canada Revenue Agency will charge a penalty and interest on the unpaid amount. To file your taxes, you will need to complete an income tax package for the province in which you lived on December 31st of the previous year. The package includes a return, federal tax worksheet, schedules, a provincial or territorial tax worksheet, and an information guide. These tax packages can be downloaded, ordered by mail, or by telephone from the CRA, or picked up in person at a postal outlet or Service Canada office. The Canada Revenue Agency encourages Canadians to file their completed income taxes online. However, you can also file your taxes by mail or by hiring somebody to do it. Most Canadians file their income taxes over the internet using NetFile. You prepare your income tax form using commercial software or a web application that has been certified by the CRA. Some software certified for use with NetFile is free. Tip: keep your RSP contribution room if you're paying little or no tax. Save it for when your income is higher. Your refund will be greater if you contribute when you're at a higher income level. CPAs run free tax clinics for low-income Canadians. Before making this presentation, you might want to check with your provincial body on the free local tax clinics that are available at the time that you prepare this presentation. You can pay your Canadian income taxes by mailing a check to the CRA, using your regular online or telephone banking, using the CRA's My Payment service, or paying at a Canadian financial institution. If you have to pay by installments, you can also set up a pre-authorized debit plan. If you're expecting a tax refund, be sure the CRA has your current address so that you will receive refunds, benefit payments, and important notices without interruption. The Government of Canada has excellent online resources to help you understand the Canadian income tax system and to provide line-by-line assistance in filing your own income taxes. You can call 1-800-267-6999 to ask questions in your own language. For most people, the process is fairly straightforward. However, if you find that your taxes are too complicated, if you run a small business, or you simply lack the confidence or time to file your taxes yourself, you might want to consider engaging an accountant to prepare and file your income tax return. A lot of Canadians rely on CPAs to prepare their tax returns. Because they are tax experts, accountants will make sure that you will pay the least amount of tax possible and get maximum benefit from any tax credits and deductions you may be eligible for. On a broader level, CPAs can also advise you on tax reduction strategies and help you create a strong financial plan for the future. Here's a short list of helpful online information that will give you more in-depth information about some of the topics that we touched upon today, including how to file your income tax. You might want to refer to your handout Glossary of Terms, as it has a great source of defining common terms that I've used throughout the presentation today. I would like to mention that CPA Canada has another session for new Canadians on how to effectively manage your money now so you can plan your financial future, build and protect your personal assets, and make sure you can financially handle major life events when they occur. If you would be interested in it, please come talk to me when we're done. And at this time, I'll open up the floor to any questions or comments. I want to say how much I enjoyed being with you today, and I hope that some of the basic areas we touched on will get you started on gaining control of your finances and developing the skills and confidence you need to make informed financial decisions. I wish you every success in your newly adopted country. Thank you very much for your time.